Guys. I just felt like talking about risk management. I feel that risk management is personal. Okay, I'm actually going live for this time, so and there's no one connected. But that's fine. There is a first time for everything, right? So when we're trading, usually like on our main group, we usually share signals and everything like that. And I believe that everybody, and I mean everybody, have their own personal equity. So, having your own personal equity, you should have your own personal risk management. I mean, if I have a maybe a $200 account and you have a $10 account. Obviously, if I enter a trade and I am willing to hold for like maybe 1 hour or the whole day, it might go into the negative for like some time, and then later, maybe when I come back and check it, and then it's blue, then I'm in profit. Then we have this guy with a $10 account, and he enters the very same trade. Then what happens? It goes into red for like sometimes, and then he blows. And then Coffee says, "Do you trade currencies?" Yes, I do trade currencies, Coffee. But then I don't usually trade currencies that much. I don't do it like the way I do with synthetic indices. So I do trade currencies, not all the times though. I do it sometimes because currencies has a lot to do with your news and all that. So I do trade currencies. Yeah. So guys, just make sure that you try and do your proper risk management very well, because honestly, it's personal. It's really personal. Risk management is personal. It has nothing to do with the signal that is given. Should you maybe enter a trade and you get maybe $2 and you have a $10 account, just close it. You must have a plan. At least have a plan. Have a journal. Plan your trades. Have a plan. Maybe you want to make $2 a day. In 5 days, you have $10 on top of that. See? So at least have a plan. Mm, yes, yes, I do have the same strategy. I use the same strategy. And guys, the most powerful strategy, it's price action. If you follow price, you'll never go wrong. All your indicators are for confirmation, so you don't have to be relying on indicators for entering a trade. Your best strategy for to follow first, like your first thing that you have to go for before you go for anything else, it's it's your price action. So you better do your price action at least on your higher time frame. So at least go to your 1 hour time frame or your um, hello, I just like went out for my breakfast. mm, of course, coffee, of course. The strategy that I use when trading volatility, when trading boom and crash and all that, it's the same one that I use for currencies. See, so yes, I use the very same one. I use the very same one, and mostly I use my the golden X, uh, the golden X strategy, the golden cross. Some people call it the golden cross. Some people call it the golden X. So of course, sometimes I use the golden X, and sometimes I use the I use any other indicator that maybe you want to use. But the main key point, the main one, the main strategy, it's price action. That's what you should go for. Do it on your higher time frame, enter in your lower time frame. Do it on your higher time frame, enter on your lower time frame. Then you will never go wrong. Your indicators, on your indicators, you don't have to follow indicators. Um, your indicators don't confirm your entry. Your indicators will not confirm your entry. So if you want to enter a trade, first thing first, you must maybe on a higher time frame draw your trend lines. I when I trade, usually I usually would check my 1 hour time frame, um, maybe daily time frame or 4 hours time frame, and one of them I just decide. Then I draw. My trend lines, your support and resistance and all that. So that's enough to actually tell you whether the market is going down or it's going up. So when you go back to your 5 minute time frame or to your 1 minute time frame, that's where it's the market is actually like that's where you're actually going to look. You check your indicators, and your indicators will tell you that okay, you actually confirm with your indicators. I don't know if you get me. Free spikes indicators says volatility and boom. Which one do you trade best? Oh, I love catching spikes. I love catching spikes because it's manageable. You see, it's much more manageable than trading volatility. Um, and on volatility, it really depends on which one I wanna go for. Um, but then I actually prefer, even from the beginning, cause at first I used to actually just depend on indicators. So I actually prefer spikes. I actually prefer catching spikes, boom and crash. That's what I prefer. That's what I prefer. I actually make a lot of money there. So whenever I just go into the higher time frame, maybe 4 hours time frame, I love 4 hours. It's usually straightforward, and a daily time frame. So I'll just maybe draw my trend lines, draw my support and resistance on the higher time frame. Then I will know that in the next 1 hour, or in the whole day, or in the next week, I'll have a lot of spikes coming, and then I enter. Then I go back to my daily, 5 minutes time frame or 1 hour time frame, and then I start catching my spikes. Even when you want to catch like a snipper entry, you go into your higher time frame, you check if maybe, let's say you're trading boom 1000, you check if your price has reached resistance, then you enter. um yeah, that's all about it. But on this video, guys, this is actually my first video, and I'm glad that I did it. So so the reason I did this video was because I wanted to talk about risk management. Many people don't know how to risk. They follow emotions, especially new traders, especially newbies. They suffer a great loss and great emotions, and they end up quitting because they don't know how to do a proper a proper risk management. So just make sure that you know the ratio that you want to lose. If you want to lose 1% of your money from a trade, close it. You must make a pact that, you know what, if I lose this 1% of my money, I'm going to close it. And also, there are a lot of things to consider, you know. Okay, this guy says, what's the best limit to hold on a trade? Like I'm saying, it depends on you. It's personal. It's personal, really, because I usually say I don't have $1,000 account, dollars account, or a very big account. I have $100 account. I'll sometimes just grow it to a 200, then I withdraw. So my equity is like 100, and then I make babies from it. Then I withdraw weekly. You see. So holding a trade actually really depends on, if you did your analysis right, then you should be able to hold it until it gets back to your expected movement. And your equity plays a very big role on holding a trade. So should you have a higher equity and you know that my analyses are right, then you can enter and hold it. And you know how much you want to lose. So it's very important also to know how to calculate your pips. And then you know that when my price gets here, I'm willing to lose this much. So you can calculate your pips, and then you get your price, and then you know that, okay, when it gets here, I'm going to lose maybe $10. So okay, I'm willing to lose $10 from my $100 equity. So let me just put my stop loss here. So just make sure that you always have a stop loss. I think I've covered everything. Mm, that's all about it. That's all about it, guys. Make sure that when you do your analysis, you have a proper risk management. If you're willing to lose $5, be willing to lose $5. Don't use more than that. Be willing to lose $5. Just whatever you're willing to lose, just only lose that and go away. Okay, guys, I was just out for breakfast and I'm done. And I felt that I should just address this matter because there are just so many people trading and people keep on blowing their accounts and they get frustrated. It's not right. It's not right. Sometimes I don't even feel like sharing signals on the Telegram group, because you share a signal, you know that my analyses are right. I know where my stop loss is, but possibility is that candle that you have entered on might actually maybe go against you for some time. But then the moment it comes back, then it comes back into your favor, and then it goes into profit. So if you have a $10 account, you really need sniper entries. And also, for those who are trading boom and crash, I really like no, sorry, for those who have small accounts, I recommend that you go for boom and crash, and you should be catching spikes. If you get the right indicators for your spikes, you do the right analysis, your price action analysis, then you should be good. You should be good to go. All right, you should be good to go. Okay, I actually wanna now get out of the video